Picture this. You open your banking app on a Monday morning and your business account is your personal checking account. The client payment hits, you feel relief. Then you buy groceries, pay your phone bill, and grab coffee. It's all the same pile of money. And here's the problem. The moment something goes wrong, an angry customer, a contractor dispute, a sales tax notice, your business stops being a business on paper. It becomes you personally. So today, I'm going to give you a money setup that takes one afternoon, costs almost nothing, and makes your business look like a real company. If you're an owner, your money system is not a nice to have. It's your early warning system. Without a clean setup, you will 1. Lose track of what's actually yours to spend, 2. Undersave for taxes, 3. Panic when cash gets tight, and 4. End up paying stupid taxes, late fees, overdrafts, interest, and penalties that didn't need to exist. The good news? You don't need fancy software. You need separation, rules, and a simple weekly rhythm. Today's episode is the money setup pillar, and we're building a 4-bucket system you can run from a free spreadsheet and a basic business bank account. Let's start with the foundation, separation. If you remember one line from this entire video, remember this. Your business money is not your money until you pay yourself. Not until you need it, not until you feel like it, until you pay yourself. Here's what separation looks like in real life. Step A, open a dedicated business checking account. If you're a sole proprietor, yes, open it anyway. If you're an LLC, definitely open it. If you're an S-Corp, it's non-negotiable. Use it for all client payments, all business expenses, payroll or owner draws, and tax payments. Step B, get a dedicated business card. This can be a debit card linked to that checking account or a true credit card. The point is simple. Business purchases go on the business card. Personal purchases do not. Step C, create one no exceptions rule. The fastest way to ruin the system is to create loopholes. So your rule is this. If it's a business expense, it gets paid from business accounts. If it's personal, it never touches business accounts. When you follow this rule, bookkeeping becomes simple. When you don't, every month becomes a mystery novel. A quick example. If you buy software for $39 a month, business card. If you buy gas on the way to a client meeting, business card. If you buy diapers, personal card. You're not trying to be perfect, you're trying to be consistent. Now that money is separated, we need a system that tells every dollar where to go. I call it the 4 buckets: operating, taxes, profit buffer, and pay yourself. You can run this with 4 bank accounts or with 2 bank accounts plus a spreadsheet. Let me explain both options. Option 1, the cleanest setup, 4 separate bank accounts. Business checking, operating. Business savings number 1, taxes. Business savings number 2, profit buffer. Personal checking, pay yourself. Option 2, the good enough setup. 1 business checking plus 1 business savings and a spreadsheet. You keep money physically in 1 or 2 places, but you track buckets on paper. If you're new, start with option 2 today. If you're already doing 10K plus months, move to option 1 when you can. Here's what each bucket does. Operating. This is the fuel, rent, software, contractors, supplies, advertising, everything required to deliver the work. Taxes. This is your future you protection. It exists so April doesn't feel like a jump scare. Profit buffer. This is your stress reducer. It exists so one bad month doesn't force a credit card spiral.
This is why you're doing the business in the first place. It's not what's left over. It's a planned transfer. Most owners don't have a money problem. They have a timing problem. If you only look at your numbers once a month, or worse, once a year, every decision is late. So we're going to set a weekly rhythm. Pick one day. I recommend Friday. Every Friday, you do 4 actions. Action 1, count cash. Open your business checking and savings, write down the balances. This is your reality check. Action 2, Pay taxes first. Look at all income that came in since last Friday. Set aside a percentage into taxes. A safe starting range for many small businesses is 20% to 30% of profit. If you don't know your profit yet, use a temporary rule: 15 to 20% of revenue until you have better numbers. Action 3. Build your buffer. Transfer a small amount to profit buffer. Even $50 a week matters. Your goal is to build 1 month of operating expenses, then 2 months, then 3. Action 4. Pay yourself on purpose. Whatever's left within your plan gets transferred to your personal account. This routine is boring, and boring is the point, because boring money is controlled money. Let's talk about the most common question. How much should I put into each bucket? I'm going to give you a starter framework. Not a perfect one, because your business is unique, but a framework that stops chaos. Start with revenue coming into business checking. Every week, allocate like this. Taxes, 15% of revenue temporary, then move toward 20 to 30% of profit. Profit buffer, 5% of revenue until you hit 1 month of operating expenses saved. Pay yourself, 10 to 30% of revenue, depending on how lean your operating costs are. Operating, whatever remains. Here's a concrete example. Say you collected $5,000 this week. Taxes at 15%, $750 to the taxes bucket. Profit buffer at 5%, $250 to the buffer. That leaves $4,000 in operating. Now you look at what you actually need to run the business. If your operating bills for the next week are $2,500, you have $1,500 of slack. You can increase your pay, increase your buffer, invest in marketing, or keep it as operating cushion. The power is that you're choosing, not guessing. And here's the key skill owners learn. Your percentages should tighten over time. In the beginning, operating costs might be messy. You're experimenting. Over time, you learn what actually drives revenue. You cancel subscriptions you don't use. You stop buying productivity tools that don't produce sales. You hire only when there's consistent demand. That's how you go from busy to profitable. Before we recap, one warning. Do not skip the taxes bucket even for 1 good month. The most common mistake I see is owners who feel rich after a big invoice, spend the cash, and then panic in April. Treat that transfer like rent, non-negotiable, same day, every week, especially when the number feels small. Let's recap the system. 1. Separate the money. Business checking and business card. 2. Run 4 buckets. Operating, taxes, buffer, pay yourself. 3. Weekly money day. Count cash, set aside taxes, build buffer, pay yourself. 4. Start with simple percentages and tighten them over time. If you want, I can share a 1-page checklist for this setup. Comment "Setup" and I'll turn it into a downloadable template. And if you're building your owner money system week by week, subscribe to the Owner's Ledger. This channel is about simple, repeatable decisions that make your business pay you. Next Tuesday, we're moving into bookkeeping basics, and I'm going to show you the one weekly habit that makes tax season almost boring because your numbers are already done.